Morning, everybody. It's the 26th of February. We're Signal Centre talking ball. Joe Neighbour, Ian Coleman, and Steve O'Hare. Good morning, guys.
Morning.
Good
How are we?
morning. Yeah, all right.
Yeah,
Tickety boo.
excellent news.
Very happy that the markets are finally waking up.
Yes, it's a hell of a move again yesterday.
3% US stocks, isn't it?
Yeah, pretty savage.
Yeah. Turnaround Tuesday didn't turn around.
Didn't.
No.
Kept going.
Cut
it
my
was
hand open as well, just trying to catch that knife yesterday.
We had a very good day on the old talking ball front.
Excellent.
With our guns ahead challenge, we had winners on oil and silver as a stop out for Ian, which he was probably overdue given the ridiculous win rate that he's.
I wasn't in pain for long, was I? It was before we'd even finished the chat, I think.
Yeah, so
Although I hate that.
So there was Ian's 1 hour stop out. I had oil, which actually closed at 9 o'clock, just ahead of the target at 49.40 at 49.77, so 2.7R. But Steve was the winner yesterday with a 4R win on silver, hitting target. It did actually go even lower than that after it hit the target. So
4R.
Great call from you on that.
4R?
4R.
Was it? I thought I only did a 3R trade. Can't remember.
The spreadsheet said you got in 1846.
Let me see. Not that I don't want to take the glory and adulation. 1844, I was selling it. 1854 stop and 1814 target.
Yeah, 3R then.
3R.
Very honest, Steve.
Give
honest
back.
Steve.
I know. I was trying to get out of going first. It still hasn't worked.
No, you're still going first, unfortunately.
You're still in the chair.
I can have a go if you want.
Yeah, you have a go. I've got a couple that I'm sort of.
So overall, we hit new highs.
Excellent.
63%.
New highs while the stocks are crashing.
Yeah.
Now, that's not a bad case to sell the sort of product we're doing at the moment.
Absolutely.
Gun to head challenge.
Beating the markets. Mental this morning, isn't it? It's up $16 gold already.
Okay, let me have a quick share of this then. I'm looking at euro dollar.
Oh, whoosh.
Is that what you were looking at?
No, it depends. Depends what you're looking at.
Well, I'm just looking for a correction, really. There's quite a few big positive candles that have formed around these lows, and just think there's potential for a reasonable correction, really, in the short term, having had this big sell-off here from the start of the month. It is getting away from me a little bit now, so I'm just going to take that price at 10888. I was looking to target 50%, but I think the risk reward isn't going to be particularly great on that now. I'm going to place a stop below that low there that we saw at 2 o'clock this morning on the 4-hour chart, which is at 108.59. And I'm actually going to have to increase that now to a 61.8% target at 109.70. Let's go 109.70. Stop 108.59, entering at all the eights, 2.83.
Lovely.
So, I mean, it's counter trend. Obviously, it looks horrible on most time frames, and it's probably going to run into some resistance here at these previous lows, which should now turn as resistance. It's above it at the minute, so it might get a little bit of an overshoot, but some strong momentum over the last few days. So, hoping it can continue that just for a short while before it reverses again, and looks like it'll probably head lower. That's my trade for today. A speculative counter trend one. Who's next?
Ian.
Right. I'm actually looking at this bad boy. Better share my screen. I was actually going to sell euro dollar, but I thought better of it after Joe's mumble. Dollar yen. So obviously stocks are driving lower. This is driving lower. What I do like here is if you go to this correlation chart, and I keep on talking about Joe's correlation charts. This looks pretty good for a further move to the upside. 261.8%
in the last hour.
Yeah, 261.8% up here. I don't know why, but all the readings on the yen crossover charts all read as 0. But anyway.
Yeah, you need to if you go back to that chart, if you right click on the margin and change it to percent,
Oh, boom. Okay. Lovely. So this basically lines up with those waves, with that being the first wave, and then we're actually breaking through to 61.8%. So I think it's going to be an extension down to here. So even though I'm looking at buying dips for our calls, I'm going to sell it because it's going to end, easy for me to say, going to the head challenge.
That supports my weaker US dollar trade as well.
So 110.23, 109.53, 55, and 25 tick stop. 2.72R.
Very nice indeed. Have you found one yet, Steve?
No, I haven't found nothing, mate.
You logged in as me today. It says you're Joe Neighbour in the bottom left of your screen.
Oh, no, I just clicked the same button as normal.
Before and after.
Yeah. Yeah. Thank you. Really like your obviously your target level on the oil is 49.40.
Yeah.
And it's banging on the door.
It is.
So you know, that's sort of like, I was thinking about selling a break, which would, you know, wrap up with the
You've got to
goddamn
get
challenge.
in now, so it's a little bit premature. Come, that's got
Gold.
to be your trade, hasn't it? Is that not a bull flag?
What, this?
Yeah.
You know, if you squint really hard, I think there's still a bit to play out. I think with these equities selling off, you've got to be very careful with gold. You know, normally you'd have in a normal world, you'd have gold rallying if equities sold off. But I think the issue is that over time, people have used gold as a bit of a hedge with their long stock positions.
Yeah.
And now they're getting have to get out of their stock positions because of the retracement we've had. They've obviously got to get out of the gold position as well. And that's why we're having this bit of retracement, which doesn't seem right. But that's the way the markets are acting at the moment.
Oh, that gold looks lovely. I'm going to buy that myself, I think.
Yeah. I mean, I don't know. I'm sort of tempted to sort of like this Bitcoin just bounced off 90.80.
You think Bitcoin's the new
Safe haven.
Safe haven?
Yeah, probably.
The
but,
millennial safe haven.
Yeah. Eventually it will be. Probably not at the moment, but there's a decent risk reward trade here. I'm going to go for that. I'm really apologise for my poor choice. Here, I'll get the 90.50. That'll do, donkey, and just go for a 94.35. What's that? 3.5 to 1, 94.35. So long at 91.35. Target is 94.35, and I'll do that at 90.35. So to get 3 to 1 risk reward out of that bad boy.
Very nice.
Well, I doubt it very much. I mean, obviously, if it breaks this level here, we should see another flush out. But I'm going to go for a little bit of a safe haven drive in Bitcoin.
Cool.
That's it.
Lovely. Okay, so news-wise yesterday, obviously people stepping up the panic when it comes to coronavirus. There was a bit of a rally initially in equities, but that all sold off quite aggressively, and we were 3% lower on the US markets into the close, which, if you look at some of these charts, it doesn't look particularly nice.
No, it's been a long time as well since we've had that, you know, open session, the full session being a sell-off. Normally, you'll get the buying programs come in from the US government or someone like that who support the markets, and just didn't happen yesterday.
It didn't happen at all. It's just
yeah, I think it's
Dow chart.
Let's watch today. If we do get another crap day today, I think that's a clear reversal that could be sustained for a little while longer.
If you look at the monthly charts, you're getting
those big
monthly
outside
looks horrendous.
Acute monthly reversal candles, as they call them, AMRs.
Oh, nice.
That sounds rude.
Clive would have liked that.
Oh, yeah.
So you got
powerful on the Dow.
S&P's got one as well. Well, I think they've all got them. Basically.
Yeah, I mean, the Dow chart you can see on the screen here. We've had this break trend which goes back to the beginning of 2019. So we pretty much rallied throughout that year, broken that trend. We've broken down through these lows here at 28,130. For me, the next levels to target are these fib levels. This is the 61.8% level of these lows here that we saw in the correction in May to the all-time highs. And beyond that, we've got the lows on the 26th of December to the all-time highs. We've got a 38.2 coming in at roughly the same level. So it seems an obvious point to target, I think, in the short term. Could see some buying interest around there, maybe.
26707. We've got some bespoke support. Another 300 points lower yet.
We saw a break of the channel on the S&P. I think S&P is a better gauge for the health of the US economy because it's 500 stocks rather than 30 that we have in the Dow. That has a Fibonacci confluence zone as well, around same sort of level, 2985.
Right.
We've got support at 2990, so that's nice, that one.
So I would be selling rallies probably to 3200 on the S&P. Looking to target these levels down here at 2985. So yeah, looking a bit ugly on that front, and no sign of that letting off today. Already we are heading lower after an initial bounce. Data-wise, yesterday consumer confidence was little changed at 130.7 for February, revised from 130.4. The Richmond Fed Manufacturing Index, that declined sharply to -2 for February from 20 previously. So that's gone into negative territory. In contrast to that, the Philly Fed Non-Manufacturing Index strengthened to 36.1 from 23.5. So some real mixed data in there. The Fed funds futures indicated an 85% chance of an interest rate cut by the end of July, with a 50% chance of there being 2 cuts this year. There was one of the Fed presidents saying they were not considering a rate cut at this time, while the Fed Vice Chair Clarida stated that the central bank is closely monitoring the situation. So there is talk that they could step in and do something. We also had bond yields declining to record lows yesterday, yet again. On the coronavirus front, the CDC, a CDC official stated that it was no longer a question of if coronavirus pandemic will happen, but when. So that kind of rhetoric is obviously increasing the panic.
Yeah, they've warned Americans that be prepared for it to spread into the United States.
So just bracing ourselves for more coronavirus news, I guess. I think it's certainly on a negative cycle at the minute in terms of news. There doesn't seem to be anything positive coming out about it at the moment, about containment or anything like that. So more volatility expected, I think.
Yeah, no letting up.
So be careful if you're trading, unless you're
going
out
to the shops. Or going out to the shops.
Yeah, stock up on milk and bread.
And masks. And masks.
Yeah,
Ian's got one. You got one for sale, Lee?
It's very, very, very expensive.
Is it?
Yeah.
All right. Okay. Are you selling the white one?
Depends who's buying. And the children. Just me and the dog have got one. That's
okay.
It.
Let's wrap it up there then, gents. Okay. Have a good day, everybody, and we'll catch you tomorrow.
Cheers.
Have a good one. Cheers.